But let's get to some of the specific stocks we're tracking for you today. Smartworks co-working spaces, that's the one we'll focus on. The company's third quarter margins have expanded with the overall occupancy coming in at 84% during this period. So to discuss the quarter gone by and the way forward as well for the company, let us welcome Neetish Sarda, who is the founder and MD of Smartworks co-working spaces, joining us now. Neetish, welcome to the show and thanks very much for being here. Let's start with your profit number. I mean, there's been a sharp improvement in profit before taxes. That's a 650% jump. What does that translate into profit after taxes on a normalized calculation? Keeping in mind the Ind AS adjustments, etc., that you would have had to make.
So this Smartworks has posted its strongest quarter till date. If you look at all the financial parameters that Smartworks has performed at, whether it's our revenue, which has grown to 472 crores, which is a 34% year-on-year jump and an 11% double-digit sequential jump. Our normalized EBITDA, which is what we've been tracking at, has grown from almost 69 crores last quarter to 85 crores, a 22% sequential jump and an 86% jump year-on-year. Even if you look at our NDS PAT numbers, though we've been profitable for the past few quarters, but because of the NDS impacts, the profitability didn't show. This is the first quarter where even at the NDS level, we've turned profitable and shown a PAT of about 1.2 crores to start off with. So this quarter has been fantastic. All of this is happening at a high growth stage. If you look at the total footprint that Smartworks has added, in the last quarter, we've added 2.6 million square foot of space, increasing our total footprint from almost 12.5 million to 15.3 million square foot. So numbers are increasing. Overall revenues are increasing. All profitability parameters are increasing. But all of this is happening at a high growth stage.
Sure, Neetish, thank you for waiting by. It's breaking news, but while you have become profitable post Ind AS, as you explained, free cash flow that continues to be negative. In the second quarter it was lower, it was negative. In the third quarter it's negative. The first 9 months as well, it's minus 29 crores. So when does one expect free cash flow to be positive?
Mangalam, if you look at our entire cash flow, it's grown from this quarter. We've done an OCF of about 101 crores, which is 1.2 times of our EBITDA. So the cash flow which the company is generating is significantly, from its regular business, has significantly increased. I think it's also the growth that we are spending on. We've grown from 9 million square foot to almost 15.3 million square foot within the last 2 years. This growth is where most of the spending is going towards. Free cash flow accounts for some of the growth elements. Despite growing by 2.5 to 3 million square foot this year, our free cash flows are still only negative of 29 crores, which proves that most of the capex going towards growth is actually generated from the earnings of the company itself. You will see this trajectory also improve like all our other parameters. Our revenue numbers are going up, EBITDA numbers are going up, and continuously you'll see that the company, once the existing centers outputs outgrow the new center requirements, you will see the free cash flow also significantly go higher. But if you look at the operating cash flow of the company, it's been very, very sturdy. It's been growing quarter on quarter, and this quarter we've declared 101 crores of operating cash flows generated by the company.
Neetish, just a clarification on the PAT number you gave us in a line. On a normalized basis, what would profit be? PAT, that is after tax, and should we view the business as sustainably profitable now?
So we've been profitable as a business for almost the last few quarters, but on an NDS impact with all the adjustments of NDS, this is the first quarter where we've been profitable on the NDS PAT numbers. But if you look at how this trajectory has grown, you will see in the last 3 quarters, we've grown from negative 16 crores loss last year to 6 crores in the first quarter, 3 crores, and now we've turned profitable. It is also commensurated with the EBITDA margins that the company is generating. You will see that the EBITDA margins keep going up. So with the base effect and the compounding phase that we are entering into in this quarter of 26, you will see these numbers keep going up on a regular basis, quarter on quarter.
All right, Neetish, thank you so much for joining in. Short but effective conversation. We'll continue our chat as we move along the quarter. Wish you good luck. With that, take